Good evening. Welcome to Options Center. We are here on Tuesday night, 9:30 p.m., 12/13/22. Welcome, everybody. If you're new here, go down to that bottom right-hand corner. Make sure you hit that Options Center logo and subscribe. We're going to go through ES on multiple time frames, and you know what? Essentially nothing has changed. I know there's been a lot of movement, a lot of volatility, but overall, there has really been no change in our thought here. This morning, I was putting my bull cap on and I was ready for some upside action, and there was no follow through whatsoever. So we must continue to represent ourselves as bears in this environment. It's a bear market. We're essentially in lower highs, lower lows. We're in a bear trend until proven otherwise. So let's go through ES on multiple time frames. We'll check out VIX. And I know it's cliche, but everybody's checking out the dollar, TNX, SKU. So we're going to look at all those. Okay. I put up a bunch of charts on Twitter earlier, and also on the Options Guys. If you go down to the description, it's a great Discord with lots of good traders in there that have a lot of good camaraderie and have a good time there. So, all right. Yes, on the monthly, lower highs, lower lows, testing this area here. We extended it out the last several videos. We explained that we're trying to get back. Price is trying to get back in there, but keeps getting rejected from that box. Okay, so what do we think? Rejection. We're going to head lower. On the, there's not much more to say on this one on the weekly. I don't want to repeat myself too many times from what I put out in the other videos. So on the weekly time frame, we had this ascending bearish triangle. We broke down from it, or wedge. Lower highs, lower lows, lower highs, lower lows. But what's really a point here is we're triangulating. We're getting tighter in price action. But in the morning with CPI, we broke above that triangle downtrend and got into resistance. Couldn't hold it. Came back underneath that 50-week moving average. In this case, rejected off the trend line. We're right on it as we speak. Again, we're going to talk about that MACD. We're looking for that either to play out. Are we just playing out, or are we just trying to? We're in bear territory. We remain in bear territory until we get above the zero line. But are we just making a high and then going to come down lower and break that bearish divergence or bullish divergence? Excuse me. We'll see. Again, we're back at the resistance area. Nothing to see here. And then going down to the daily time frame. And then we're going to explore a couple different avenues. Okay. Trend is our friend. All right. Again, this downtrend line, a wicked reversal, wicked move up and right back down to where we came from. You know, we're above the 200-day moving average, but we're below that downtrend line. Again, we're triangulating right in this area. We're going to have to break pretty soon, before the new year, I suppose. But until that happens, we're going to be bearish. And essentially, technically, we should be, I'm going to be more bullish if we break and close above the downtrend line. But technically, we have until about the 4,300 area before we could even consider ourselves equal, more neutral to bullish at that point. But I still think we're in a bearish sequence. Okay, looking at the MACD. On the daily time frame, we're still in an uptrend. We do have bearish divergence. We did not cross. We did not have a bull cross there yet, so that's looking pretty bad for the bulls. Same thing on the RSI. We have that divergence there as well. Made higher highs, but lower highs on these indicators. And what else we're going to look at? So tomorrow we have the FOMC. All I did from yesterday was I repositioned myself. I put myself in 400 in the 921, or excuse me, 1221, 400 puts, multiple, and then hedged myself with calls with 420, 916 calls for this Friday. So the calls are shorter term for this Friday, going into tomorrow's FOMC. Tomorrow we expect, maybe we can look it up. Tomorrow we expect a move alone for about, I believe we're looking at, let's wait for the data. I think we're looking at about 110 points to the upside or downside. So such a massive move. Okay, well, at least going into Friday at this point, we're looking at a 90-point move. And, you know, I honestly think we'll move a lot further than that itself. We took some of the volatility out today with the CPI headed up. But even a 90-point move, it's so massive of a move that we put on the trade for, again, those out of the money 420 calls for 916, and then we're into the 400 puts. And we did that at the market open, just after open. We closed out our futures calls and went into those call and put options, and we're well ahead of ourselves for the day. So we did very well for the day. But that, you know, assuming that tomorrow is a huge move, either to the upside or downside. If we're to the upside, we're going to come out, you know, on top. Not that great, but on the top, a couple thousand. But if we move down 100 to 200 points tomorrow into Friday, I mean, we're talking massive gains. So that's what we're looking for. That's what we're looking for today. And today just kind of shook us out a little bit, and we repositioned to do the same thing over again into tomorrow. All right, sorry to harp on that. Again, SPX, wicked reversal move. We have this wedge, and this is a great illustration here because we haven't changed anything on this bearish ascending wedge right here. Rejected, did the back test, rejected, had a slight high, but on the same note had a lower high on the MACD. We can change that up a little bit. Yeah, that's a better point of view. So had this wedge, broke down from it, back tested, also the downtrend line, rejected pretty hard. Bearish divergence. Same thing with the RSI. Super, super important on the RSI. We had this uptrend, broke down from the uptrend, created a lower high as well. So bearish divergence on this also. Okay. SPX was what I was really looking into instead of the futures today, because of the futures, you know, quadruple witching, and you know, points jumped up, I don't 30 points or so. So I didn't want to pay too much attention to those. Wanted to look into SPX, the cash market, because it was very specific on price action. And what we're going to look at now is, here is the VIX futures. We had this wedge we broke out from, back tested, we're still holding and looking for some upside on there. Going to, let's see here, let's look at the bonds. Bonds is right at a downtrend line. I didn't even draw that yet. I don't know if I have to. Bonds, downtrend. Simple there. Downtrend line right at resistance. See where we go from there. The dollar. Dollar's getting right back at support. It's this is a zone. This is not exact where this mid channel line is. It could be up a little bit further. So, but the whole point is we had a B, C correction. A, B, 1, 2, 3, 4, and an ending diagonal for 5. So I think we hit a bottom there, or at least really close to it. And we have a divergence line here. That's kind of weird written there, but are drawn out there. TNX. Again, looking for some more upside. We're hitting, let's see, some uptrends. I know it's not drawn out perfect here, but we're still in an uptrend right there. All right, we're looking for support. If we break through, fine. If we don't, whatever. We're going to trade what we see. Skew jumped up to 122. So we're seeing some higher skews, which is out of the money put protection, and breaking out of the wedge. You see the skews up here at 122. So making a move there. Getting into, you saw the VIX and everything. Apple. I put all these charts out for the biggins. I know we're not set up, but going into the trend is our friend. Rejected off a triangle top there. Amazon. Same thing. We have a triangle. You can check all this out on Twitter. Had these come out, rejected off that triangle top. Meta was more of a real big weekly or even monthly resistance here. So that's what it rejected off there, and also this downtrend line as well. So also at resistance. And Google right into resistance as well, rejected off of it. Microsoft. Big resistance with the 200-day moving average. Also this resistance line here. So again, and divergence as well, bearish divergence. I missed a couple bearish divergence on the last ones that I talked about. I was doing this, I was updating this. Lost support here on Tesla. So we're getting into this inbound area here, which maybe we should have some bounces back and forth inside of that range, but I do suppose we should hit the bottom of that 125 area. NVIDIA, we did a lotto call, or excuse me, a lotto put on NVIDIA, just because it was so overextended with bearish divergence as well. Here we do have an uptrend line that we'll have to watch out for, but came right into this massive resistance area there. So we're looking for a reversal here as well on NVIDIA, and so on and so forth. I'm not going to bore you anymore. I'm going to end it right there, but just know that going to FOMC, we have a lot of resistance above us. It doesn't mean that we can't get over those resistances, but just know that be careful. Have put protection if you're a bull, or in my case, I'm a bear. I'm going to go back to SPX. So I put on call protection. Let's go straight to SPY so I can show you exactly what I'm talking about. All right, SPY on the daily. All right, rejected off of this downtrend line. But if we decide that we're going to be super bullish going into FOMC after Apollo talks at 2:30, 3 o'clock, whatever, 4:20, right around this area is the next resistance around this 422. We should probably hit that area pretty fast and furious into Friday. And so that's where our calls are, right into 420. And then our puts are at a little bit more near the money at 4,000. And that's where we keep ending up anyway because of options interest. And I showed you that in yesterday's video or this morning's video as well, I think. But this 400 area, and we do think that the target is going to be more at that 370, and we're getting close right here. We're looking for that target right here. And we're getting a little bit close to the end of the week, so we do think that'll be more into next week. So that's why I went out a little bit further in the expiration for 12/21. You know, to see if we can get down there pretty fast if Powell says things that kind of takes the steam out of the market. Other than that, that's all I got for you. Thanks for joining us here at Options Center. Have a wonderful night. Don't forget to like the video, and we'll see you tomorrow.